Good morning, everyone. So, in the last class, we concluded the first chapter, right? So, all the 3 units pertaining to first chapter were concluded. Okay, so let's start up with the second chapter, that is preparation of statement of profit and loss and balance sheet as per Schedule 3 of Companies Act. So, here we'll be actually learning how exactly do we prepare this P&L account when it comes to companies, and how exactly the companies would be preparing their balance sheet. If you remember the initial class, okay, so I gave you the difference between what is financial result and what is financial position, right? Correct. So which statement do we prepare in order to ascertain the financial result? So you can either call it as financial result or financial performance. Okay, so it would be profit and loss account. Okay, and then in order to ascertain the financial position, the statement what we'll be preparing would be balance sheet. Clear? So here we'll be learning about how exactly the companies would be preparing. Okay, so at this level you will be learning all the transactions relating to company. So even if you refer the first chapter, we discussed about the journal entries pertaining to issue of shares, okay, buyback of shares, okay, bonus issue of the shares. Clear? So redemption of debentures, preference shares, all these things relating to company. In the second chapter, we'll be learning about how exactly these companies will be preparing the financial statement. Subsequently, we'll be learning how exactly do they prepare the cash flow statement, and finally we'll be learning about how exactly different entities, whether it is banking company, insurance company or electricity company, how do they prepare the financial statement. Clear? So Schedule 3 will not be applicable for the banking company, electricity company and insurance company. They have got their own regulating body. So the format in which they are supposed to prepare the financial statement will be prescribed in their respective act. Clear? So in this chapter, there will be quite a few theoretical aspects also. So when it comes to Companies Act, there will be a lot of rules and regulation, okay, which has to be followed with respect to preparation of financial statement. All these rules and regulation you need to remember. Anything which is important, don't worry, as usual we'll be drafting them in our notes. Okay, so fine. So on that note, let's just start with the second chapter, preparation of financial statements, okay, of companies. This is mainly with respect to companies. As per Schedule 3 of Companies Act. Okay, so let's start up with this particular unit. So first thing is, here it is. So introduction. So they would have given you the introduction aspect. Let's just quickly look into this. So look at this. Financial statements are compilation of financial data collection and classified in systematic manner according to the accounting principle to assess the financial position. Look at this. Financial performance and financial position. So you guys should be thorough with respect to the meaning of these two terms. Financial performance and financial result are one and the same. So when I say what exactly is the performance of the business entity, I'm just measuring it in terms of profit or loss. So I want to know whether the business entity is making profit or whether it is incurring loss. Okay, so this is how I'll be determining the financial performance of the business entity. So when I say financial performance, I'm just referring to what? I'm just referring to the profit made by the business entity or the loss incurred by the business entity. Okay, so when it comes to financial position, financial performance and financial results are one and the same. Okay, so financial position is nothing but what exactly is the value of assets and liabilities of the business entity on a particular date. So the statement what we prepare in order to ascertain the financial performance of the entity would be P&L account, and to assess or ascertain the financial position, the statement what we'll be preparing would be balance sheet. Clear? So here you will have to remember these two terms, financial performance and financial position. Okay. So these are basic and formal means through which management of an enterprise make public communication of financial information along with selected quantitative details. Now once the company prepares the financial statement, it will have to communicate it with the various users, okay, like shareholders, okay, banks, financial institutions, debtors, creditors, okay, government for that matter. So once they prepare the financial statement, it will have to communicate. It's not that they prepare the financial statement and keep it in the locker. No, they'll be communicating it with the various users. Okay, so that's why they say this particular statement. Okay, so these are basic and formal means through which management of an enterprise make public communication. So with the help of these financial statement, it will be able to communicate a lot of information to the public in general. Okay, so what information will it be communicating or conveying? Yes. So shareholders, although you know that these are the owners of the business entity, will they be participating in the management of affairs of the company? No, right? They don't participate. Okay, so at the end they should be knowing what exactly is the quantum of profit which was made by the business entity. Okay, so that's the reason it would be communicated with the help of these financial statements. So these financial statements will be presented in the general meeting wherein the shareholders will have a look at it. Okay, so it will give us a lot of information about what exactly was the profit made by the business entity, how much was the sales. Okay, so all the details relating to the entire year's performance will be available in this financial statement. Okay, so the structured financial representation of financial position, performance and cash flow of the enterprise. So when it comes to financial statement in detail, it will also be including the cash flow statement. Okay, look at this. What information will be communicated? It is structural financial representation of what? Of financial position, performance and cash flow of the enterprise. Three things will be communicated. Financial performance, that is nothing but the profit or loss made by the business entity. Financial position, that is nothing but the values of assets and liability of the business entity. And finally, the cash flow of the enterprise. Okay, so how much was the cash flow from operating activity? How much was the cash flow from financial activity? How much exactly was the cash flow from investing activity? How much was the inflow of money? How much was the outflow of money? So this cash flow statement is nothing but a statement which will give us information about the inflow of money and outflow of the money. Okay, and at the end, how much cash is left over. Clear? So all these information will be communicated with the help of financial statement. Three things basically: financial performance, which is nothing but the financial result; financial position, that is nothing but the value of assets and liabilities; and then cash flow statement will give us information about inflow of money and outflow of money. Cash flow statement, don't worry guys, the next chapter, if you see chapter number 3, it is cash flow statement. There will practically be learning how exactly do we prepare this cash flow statement. Clear? Okay. So after this, they say many users rely on general purpose financial statement as the major source of financial information, and therefore financial statement should be prepared and presented in accordance with their requirement. Of course, some of the users may have the power to obtain information in addition to that contained in the financial statement that do not undermine the dependence of general users on the information contents of financial statement. So normally the financial statement will be prepared, okay, in order to serve the general purpose. Okay, what is the general purpose? To communicate the financial performance and financial position. Okay, this is the general purpose. Now there will be specific purpose requirement. Okay, there will be some specific purpose requirement. Now let us say bank. Okay, so bank has already given a loan. Okay, so bank has already given the loan to this particular business entity. Now bank will be asking for some specific requirement. So they are not interested in all the aspects. Now let us say at the end of each and every year, they ask the business entity to submit the stock statement. Okay, so the receivable and payable statement. Okay, that is debtors and creditors. Okay, aging analysis. Okay, so few reports is what the bank people will be asking. So that would be treated as specific purpose. Okay, so the document or the report serving the specific purpose over there. So when they ask us the information relating to stock alone, there is some purpose, right? Correct? So I should be sending them only the stock report. Clear? Not a relevant point anyway. So financial statement provide information that is useful to a wide range of users in making economic decisions. They show the results of stewardship of management or accountability of the management for the resources entrusted to it. Okay, so look at this. Financial statement provide information that is useful to wide range of users. Okay, so when it comes to users of financial statement, a lot of users will be involved. It can be government. Okay, for the purpose of taxes, the government will be interested in financial statement or financial information. It can be the employees, it can be debtors, it can be creditors, it can be bank or financial institutions. A lot of people will be interested in financial information of the business entity. Clear? So in order to make up a lot of decision, these financial information will be required by these people, the various users. Okay, so they show the result of the stewardship of the management. So these financial statement prepared will be showing the efforts of the management. See, although shareholders are the owners, will they be taking active part in the management? No, right? So they won't be taking active part in the management of affairs of the company. So these are entrusted with a separate body called as board of directors. Okay, so they'll be entrusted with the management related activities. So they are the one who will be managing the business. They are the one who will be preparing the financial statement. So it shows the result of stewardship of management. Okay, so how effectively are they doing their activities? Okay, so it will just be showing that, or the accountability of the management for the results, for the resources which is entrusted to it. Clear? So how well are these management accountable? All these information will be available in this financial statement. Okay, let's have a look at this different types of financial statement. Okay, so when it comes to first paragraph, nothing much important. All that you need to know is just the meaning of these two terms. What is financial performance and what is financial position? Performance, nothing but the result of the business entity. Okay, to determine whether the business entity is making profit or whether it is incurring loss. Okay. Okay, let's talk about types of financial statement. The following are the major types of financial statement prepared by the entities. Okay, so statement of financial performance, or this is also called as income statement. Statement of financial state of affairs or balance sheet. Statement of changes in financial position. Okay, statement of inflow and outflow of cash, that would be cash flow statement. So these are the different types of financial statement. So here if you guys just have a look at it, it mainly includes your P&L account, which will give you the information relating to what? Financial performance. Okay, so financial state of affairs, okay, or financial position, it is balance sheet. Okay, state of affairs and financial position, both these information will be available in balance sheet. And finally, the cash flow statement, to determine the inflow and outflow of money, will be preparing this cash flow statement. Okay. Okay, let's have a look at the next thing, regulatory framework related to preparation of financial statement. Okay, so regulatory framework with respect to preparation of financial statement. So there are certain rules and regulation, okay, or certain provision what we need to abide, okay, whenever we are preparing the financial statement. Let us understand what are those. So in India, preparation and presentation of financial statement, okay, is guided by what? It is guided by Companies Act 2013, Companies Account Rules 2014, accounting standard, that is AS and Ind AS. Okay, so wherever it is applicable, accounting standard and Indian accounting standard, we need to be complying wherever it is necessary. Clear? So when it comes to provision, we have got a separate accounting standard. When it comes to fixed asset, we have got a separate accounting standard. When it comes to depreciation, we have got separate accounting standard. Okay, so when it comes to this revenue recognition, we have got separate accounting standard. So any aspect relating to these items, even the accounting standard rules have to be considered. Okay, so basically we'll have to follow what? We'll have to follow the provision of Companies Act 2013, Companies Account Rules 2014, and then accounting standard including the Indian accounting standard. So accounting standard, don't worry, the last chapter is with respect to accounting standard. Okay. Okay, so let's talk about the meaning of the term. Okay, all these terms have been defined in the Companies Act. Okay, so look at this meaning of financial statement. According to Section 2, Clause 40 of Companies Act 2013, financial statement in relation to a company includes. Okay, so look at this, financial statement in relation to company includes. This is an inclusive definition. So what and all things will be included? A balance sheet which is prepared at the end of the financial year. Okay, a profit and loss account, or in case of a company carrying on any activity or non-profit organization, it would be income and expenditure account for the financial year. See, profit-making entities will always be preparing P&L account, whereas non-profit organization, they'll normally be preparing receipts and payment account, income and expenditure account, and balance sheet. Clear? So for profit-making entity, it would be P&L account. For non-profit organization, it would be income and expenditure account. Okay. So the third thing would be cash flow statement for the financial year and explanatory note annexed to or forming part of this particular financial statement. So any explanatory notes, normally we'll be calling it as notes to accounts. Okay, even that would be a part or component of financial statement. Clear? So I'll just write this. So financial statement shall include what and all? The first thing is balance sheet, statement of profit and loss account or income and expenditure account in case of non-profit organization. The third thing would be cash flow statement. The last thing would be notes to accounts. Look at this. Any explanatory note annexed to or forming part of the financial statement. This is nothing but the notes to accounts. Okay. So, however, the financial statement with respect to one person company, small company and dormant company will not be including cash flow statement. So, certain relaxation has been given when it comes to Companies Act 2013 that small company, dormant company, okay, and one person company, these company need not prepare financial statement. So, it is not compulsory for them to prepare, the cash flow statement, not the financial statement, it is cash flow statement. So, financial statement of one person company, small company and dormant company will just be balance sheet, P&L account and any notes to accounts forming part of financial statement. That's all. So, cash flow statement, it is optional. They need not be preparing the cash flow statement. Is this clear? Hope you guys understood this. I'll just write this particular point. Try to remember this. Okay. So, one person company, dormant company and small company need not prepare the cash flow statement. Okay, so these entities or these type of company, they need not prepare this cash flow statement. Hope this is visible now. I've just increased the size. Yeah. So, one person company, dormant company and small company, they need not prepare the cash flow statement. So, if they just prepare the balance sheet, P&L account and notes to account, that would be more than sufficient. Okay, let's have a look at the next thing. Meaning of financial year. Now that you guys know what is financial statement, let us understand what is this financial year. Look at this. 241 financial year in relation to any company or body corporate means the period ending on 31st day of March every year. Okay, the period ending on 31st March of every year will be treated as financial year. Where a company has been incorporated after 1st Jan of a year, the financial year will end on 31st day of March of the following year. Okay, so if this particular company was incorporated on 1st day of January of that particular year, the financial year will be ending on 31st March of the subsequent year. Clear? Just remember this much: when it comes to financial year, it is nothing but that particular period which will be ending on 31st March. Okay. So, if a company or body corporate which is holding company or subsidiary company or associate company of a company incorporated outside India and is required to follow a different financial year for consolidation of its account outside India, the tribunal may, if it is satisfied, allow any period as its financial year, whether or not that particular year is a financial year. Clear? Now, there might be few companies which will be holding company, subsidiary company or associate company of a company which is incorporated outside India. Clear? Now, let us say there is a particular company which is subsidiary of the holding company which is incorporated outside India, that is subsidiary of a foreign company. Now, when they are preparing the consolidated financial statement, they will be applying their country law. Okay, according to their country law, let us say the financial year will be ending on 31st December. So, at that point of time, the tribunal, if it is satisfied, it may consider some other period as financial year. Okay, so even the year which is ending on 31st December can be considered as financial year in that case. Did you understand? So, in India, will be normally following this April to March approach. Okay, so 1st April 2022 to 31st March 2023. This would be considered as financial year 22-23. But when it comes to foreign countries, they'll be having their own financial year. Okay, suppose when it comes to USA, they'll be following Jan to December approach. Clear? If at all there is any subsidiary company, associate company or holding company of a company which is incorporated outside India, okay, and for the purpose of preparing the consolidated financial statement. What is this consolidated financial statement? So, it would be like this. So let us say there's a holding company, okay, so HINC, okay, so which is incorporated in USA. So in USA they'll not be using H limited and all, okay, so foreign company they'd always use this term HINC. INC is nothing but incorporated. So this has got a subsidiary, let's say Yes Limited, which is in India. Now when this company prepares the consolidated financial statement, what is this consolidated financial statement? This is not cash flow statement, don't get confused, okay. So when they are preparing the consolidated financial statement, along with the transaction relating to HINC, they should also be considering the transaction relating to their subsidiary, okay, which is Yes Limited. So they'll be combining the transaction of Yes Limited and together they'll be preparing one financial statement. That is what is called as consolidated financial statement, okay. So at that point of time we need to be following the rule relating to this holding company which is situated in USA, okay. If they are preparing the financial statement from Jan to December approach, clear. So this Yes Limited also, for the purpose of consolidation, will be taking the transaction relating to this particular year only, that is Jan to December, and then will be preparing the financial statement. So for the purpose of consolidation, financial year for Yes Limited also will be treated as Jan to December. Is this clear? Hope you guys understood this. Okay, look at this. Frequency of financial statement. For what interval of time or for what frequency am I supposed to prepare this financial statement? Okay, so financial statements are prepared. Annual financial statement, that is once in a financial year. Quarterly financial statement, which are prepared by listed companies on a quarterly basis as per SEBI requirement. See, when it comes to financial statement, for what frequency are we supposed to prepare the financial statement? Okay, so let me just write the meaning of these terms. It refers to a period of 12 months ending on 31st March. In few cases, that is when the company is newly incorporated or when the company is being liquidated, it need not be 12 months. Okay, so the financial year in few cases will be less than 12 months. Okay, so after this, frequency. Frequency of preparing the financial statement. Okay, so first case it would be annual financial report, or you can call it as annual financial statement, prepared each year. Okay, so this will be prepared once in a financial year. Okay, so this would be prepared each year. Okay, so that is at the end of the financial year they'll be preparing this. Quarterly financial statement, prepared every quarter. Okay, normally when it comes to the listed companies, they'll be preparing the financial statement at the end of each and every quarter. Okay, so Reliance Limited, Infosys, okay, HDFC Bank Limited, all these are listed companies. So listed companies are what? Those companies whose shares are listed in the stock exchange. Okay, so every quarterly they'll have to declare their result. Okay, so at that point of time the market price of the shares also will fluctuate. Okay, so whenever it is result announcement day of each and every quarter, okay, so there will be little fluctuation in the prices of these company shares. So as per SEBI regulation, every listed company will have to prepare the financial statement on a quarterly basis. Okay, that is each and every quarter they'll have to prepare the financial statement and they'll have to submit it to SEBI. Clear? Okay, that's what has been given over here. Look at this quarterly financial statement which is prepared by the listed company on quarterly basis as per SEBI requirement. So let's talk about the next point, preparation of financial statement by entities. Okay, so Companies Act 2013 provision has to be followed. So Companies Act, Companies Accounts Rules 2014, okay, accounting standard, all these things are the requirement which has to be fulfilled. Look at this, all these things are provisions relating to Act, Companies Act 2013. Later if you go on, look at this, Companies Account Rules 2014. Do you find this? Clear? So let us understand the provisions of this particular Companies Act and Companies Rules with respect to preparation of financial statement. Okay, so regulatory regulations for preparation of financial statement. So what and all should we comply while preparing the financial statement? We should be comply with Companies Act 2013, Companies Accounts Rules 2014, Accounting Standard and Indian Accounting Standard. Clear? So these are the things what we need to look into. Okay, or the provision relating to these aspects should be considered whenever we are preparing the financial statement. So let's talk about the provisions relating to Companies Act 2013. Look at this. Section 129 subsection 1. Okay, so let us understand what exactly does it say. Okay, so even if you guys are not able to remember the sections, it is completely fine. But remember the provision relating to preparation of financial statement. Section number, if you don't remember, no problem. Okay, but make sure that you guys are able to remember this particular provisions. Okay, so let's look into this. The financial statement shall give a true and fair view of the state of affairs of the company or companies, comply with the accounting standard. Okay, it has to comply with the accounting standard notified under section 133 and shall be in the format of schedule 3. Okay, so when it comes to section 129 subsection 1, three things it is telling. Financial statement should be showing true and fair picture, and it should be prepared in accordance with accounting standard, and it has to be prepared as per the format which has been prescribed in schedule 3. Provided that the item contained in such financial statement shall be in accordance with accounting standard. Provided further that nothing contained in this subsection shall apply to which companies? Insurance company or banking company or a company engaged in generation and supply of electricity company. So these company need not be preparing the financial statement as per schedule 3. Okay, so over here they say that this particular provision is not applicable for banking company, insurance company and electricity company, that is company engaged in generation and supply of electricity. Clear? All the companies shall prepare the financial statement in such a way that it shows true and fair view. So here you will have to remember this particular term. Okay, so true and fair view. Another thing is companies shall prepare the financial statement as per the accounting standard prescribed under section 133. Okay, so and schedule 3. So two things over here. One is schedule 3, that is the format in which they are supposed to prepare the financial statement, and accounting standard. So if you just remember these terms, financial statement should always be prepared in such a way that it is showing true and fair view of the company's affairs, state of affairs. Okay, and it should be prepared in accordance with the accounting standard and the format which has been prescribed in schedule number 3. Okay, so these provisions shall not be applicable for banking companies, insurance company and electricity company. So either you can call it as companies, okay, so which are engaged in generation and supply of electricity, or electricity companies, okay, both are one and the same. Clear? So this would be the first subsection. So then if you see the second subsection, that is section 129 subsection 2, at every annual general meeting of the company, the board of directors of the company shall lay before such meeting financial statement for the financial year. So as per this section 129 subsection 2, it states that at every annual general meeting or AGM, the board shall present the financial statement. Clear? So at every annual general meeting, the board of directors should lay before this particular meeting the financial statements. Okay, so financial statement shall be presented in the annual general meeting every year by the board of directors. Simple. Now let's have a look at this subsection 3, where a company has one or more subsidiary. Okay, so if the company has one or more subsidiary, it shall, in addition to financial statement provided under subsection 2, produce or prepare a consolidated financial statement of the company and of all the subsidiaries in the same form and manner as that of its own, which shall also be laid before the annual general meeting of the company along with laying of its financial statement. Okay, so what they are telling is, so when it comes to section 129 subsection 3, where a company has one or more subsidiary companies, then along with preparation of its financial statement, the company shall also prepare the consolidated financial statement, including all its subsidiaries, and produce such consolidated financial statement in the annual general meeting. Clear? So when the company has got one or more subsidiary company, at that point of time, along with presentation of their own financial statement, the company should also be preparing and presenting the financial statement, including the transactions of all its subsidiaries. Okay. Then when it comes to subsection 4, the provision of this act applicable to the preparation, adoption and audit of financial statement of a holding company shall mutatis mutandis apply to the consolidated financial statement. Okay. So whatever provision is applicable with respect to preparation, okay, so preparation of financial statement, adoption of financial statement and audit of financial statement shall apply mutatis mutandis. So mutatis mutandis is as good as ditto. Okay. Whatever provision are applicable for audit, okay, preparation of financial statement or adoption of financial statement for the financial statement of holding company, same provision exactly in the same way shall also be applying for consolidated financial statement. Okay, so I'll just write this particular provision. All the provisions related to preparation, adoption and audit of financial statement of holding company shall mutatis mutandis. So mutatis mutandis is as good as ditto. Okay, you guys should have heard about this term, right? Now let us say I write 50,000 over here. Okay, I would be showing a symbol like this. What does it mean? Here also it is 50,000, here also it is 50,000. Okay, so ditto it is. Okay, So same thing is mutatis mutandis. Mutatis mutandis is as good as whatever is applicable for this particular entity, exactly same provision will be applicable for the other entity. That's what they are telling in this subsection 4. What are they telling? All the provisions relating to preparation, adoption and audit of financial statement applicable for holding company shall mutandis mutandis be applicable for consolidated financial statement also. Is this clear? So same provision whatever are applicable for the holding company, exactly same provision will be applicable with respect to the consolidated financial statement also. Okay, so nothing would change. Okay, so let's have a look at this subsection 5. Without prejudice to subsection 1, where the financial statement of a company do not comply with accounting standard referred to in subsection 1, the company shall disclose in its financial statement the deviation from the accounting standard, the reason for such deviation and financial effect. See, whenever I am not following accounting standard at that point of time, 3 things I need to communicate in my notes to accounts. Okay, so any deviation, I need to mention that this is the deviation from accounting standard. What exactly is the reason for such deviation and what exactly will be the financial effect of such deviation. Okay, so let me write this point. Whenever or when the company do not follow the accounting standard, then the company shall be required to communicate, okay, few things. What are those few things? The first thing is communicate in the financial statement. The company shall disclose in its financial statement the deviation from the accounting standard. Okay, so the company shall communicate or disclose in the financial statement such deviation from accounting standard, reason for such deviation, and what? And financial effect. Clear? So all these 3 things have to be communicated. Okay, what exactly is the deviation from accounting standard? Okay, what exactly is the reason for such deviation? Why are you deviating from accounting standard? Because of such deviation, what is the effect on the financial statement? Okay, so because of such deviation, your financial statement, is it showing extra profit or is it showing less profit? Okay, all these things have to be communicated, okay, or has to be disclosed. Then when it comes to, that's all with respect to 129, then we have got 137 subsection 1. A copy of financial statement including consolidated financial statement, if any, along with all the documents which are required to be attached or forming part of such financial statement, duly adopted at the annual general meeting. Okay, so this is with respect to adoption at the annual general meeting, shall be filed with the registrar within 30 days of the date of annual general meeting, in such a manner with such fee and additional fee as may be prescribed. So they are just talking about submission of these annual return, okay, or financial statement with the registrar of the companies. Okay, so within what period? So within 30 days from the date of conclusion of annual general meeting. Okay, so these financial statement has to be submitted with ROC. The company shall submit the financial statement along with consolidated financial statement with the registrar. You can either call it as registrar or ROC, registrar of companies. Okay, within 30 days from the date of completion of annual general meeting. The financial statement will be adopted in the annual general meeting by the shareholders, and within 30 days from this particular date of annual general meeting, these financial statement has to be submitted to the registrar of company, that is to ROC. Clear? So legal provision relating to Companies Act 2013 is clear, right? So these are the provision what has to be fulfilled. Okay, and again when it comes to Companies Accounts Rules 2014, see, normally when it comes to rules, all the procedural aspect would be given. Okay, so let's have a look at this rules. Companies Account Rules 2014. See, if you just go through the notes, more than sufficient, guys. Okay, so you need not go through the detailed information which is given in your study material with respect to these aspects. Each and every point I've just summarized and written in the notes. If you just go through the notes, more than sufficient. Let's have a look at this. So Companies Accounts Rules 2014, Rule 4A, the financial statement shall be in the forms prescribed. Look at this, shall be in the form specified or prescribed as per Schedule 3 of the Act and comply with the accounting standard and Indian accounting standard. Same thing, it should be as per the format prescribed in Schedule 3 and it should comply with accounting standard and Indian accounting standard. Provided that the terms contained in the financial statement shall be prepared in accordance with the definitions and other requirements specified in accounting standard or Indian accounting standard as the case may be. So when it comes to rules, the first point what they say is the financial statement shall be prepared as per the format prescribed in Schedule 3 and it should also comply with the provisions of accounting standard and Indian accounting standard. This is what is the first point. Okay, so all the provisions relating to accounting standard including the Indian accounting standard has to be fulfilled. So when it comes to the next thing, every company shall file with the file the financial statement with the registrar together with Form 2 AOC4 and the consolidated financial statement, if any, Form AOC4 consolidated financial statement. Okay, so remember I told you that within 30 days from the date of conclusion of annual general meeting, the companies will have to submit the financial statement with ROC. So there is a prescribed form in which these particular companies will be submitting the financial statement with ROC. What is that form? That form is nothing but AOC4. Okay, so you just remember this much, AOC4 more than sufficient. Clear? So AOC4, and with respect to consolidated financial statement, those entities which has got subsidiary companies, they'll have to submit this consolidated financial. It would be called as Form AOC4 CFS. CFS is nothing but consolidated financial statement. Clear? Okay, then when it comes to, I'll just write this particular point. The company shall submit the financial statement to ROC in Form AOC4 and Form AOC4 CFS. For consolidated financial statement. Just remember this much. Okay, just try to remember this form number. AOC4 is the form number. Okay, if at all they are asking any MCQ question, just remember this. So form AOC4. Okay, so in order to submit the financial statement, if it is consolidated financial statement, it would be AOC4 CFS. Okay, so CFS stands for consolidated financial statement. Clear? Okay, let's have a look at the next rule. The class of companies as may be notified by the central government from time to time shall mandatorily file their financial statement in XBRL, Extensible Business Reporting Language. Okay, so format, and the central government may specify the manner of such filing under such notification for such class of companies. See, there are certain classes of companies which will be mandatorily required to file this particular financial statement in XBRL format. What is XBRL format? Extensible Business Reporting Language. So there will be a separate disclosure for each and every item. So this is as good as a kind of detailed financial statement. Okay, so there are certain category of companies which will have to submit the financial statement as per XBRL. Suppose the company has got share capital of more than 5 crores. Okay, so turnover of more than 100 crores. These type of companies will have to mandatorily submit the financial statement in the XBRL format, that is Extensible Business Reporting Language. Okay, form and content of financial statement. Okay, so financial statement will be containing what and all things. Okay, so let's talk about this form and content of financial statement. The form and content of financial statement have been specified in Schedule 3. Okay, the form is nothing but the format in which they are supposed to prepare the financial statement. So it is clearly been given where? It is clearly been given in Schedule 3. Okay, the objective of such specifications is to improve the comparability of the financial information across the entities. So why do you think a particular format has been given? When all the business entities are preparing the financial statement in the same format, don't you think it will enable the comparability of the financial statement? I can easily compare the financial statement of two entities. Now let's say I've got A Limited and B Limited. Both are these companies. So they'll be preparing the financial statement as per the format which has been prescribed in Schedule number 3. When both these companies are preparing the financial statement in the same format, it would be easy for me to compare these two financial statements. If I just have a look at the financial statement of A Limited and financial statement of B Limited, both would have been prepared in the same format. So when I look at it, it would be easy for me to compare the information. Okay, both the entities would have prepared the financial statement in the same format. Hope you guys understood this. Clear? So that's the point what they're telling over here. Okay, so it would be easy for the users to compare the financial statement. Okay, so let's talk about Schedule 3. So Schedule 3 of Companies Act 2013 comprises of 3 divisions. So Schedule 3 will be having 3 divisions. Let's look into these 3 divisions. So we have got Division 1, which talks about the general instruction for preparation of the balance sheet and statement of profit and loss account of the company, whose financial statement are required to comply with company's accounting standard rules. So here it talks about company's accounting standard rules. Okay, so here when it comes to Division 1, it will be giving the general instruction with respect to the companies in order to comply with the company's accounting standard rules. Okay, when it comes to Division 2, general instruction for preparation of financial statement of companies whose financial statement are drawn in compliance with company's Indian Accounting Standard Rules 2015. Okay, so here they talk about compliance with what? Previously they talk about compliance with accounting standard. Look at this. General instruction for preparation of balance sheet and P&L account, okay, of a company whose financial statement are required to comply with accounting standard. General instruction for preparation of financial statement of the companies whose financial statement are drawn in compliance with company's Indian Accounting Standard Rules 2015. Okay, so then when it comes to Division 3, general instruction for preparation of financial statement for NBFCs, non-banking financial companies, whose financial statements are drawn up in accordance with company's Indian Accounting Standard Rules. See, first thing is for those companies for which accounting standard is applicable. Second thing is those companies' financial statement for whom Indian Accounting Standard is applicable. Third case is with respect to preparation of financial statement of non-banking financial companies, NBFCs, okay, so whose financial statement are prepared in compliance with Indian Accounting Standard. Clear? Note, in this mode, preparation of financial statement, or in this particular module, preparation of financial statement has been discussed primarily as per Division 1. Okay, that is financial statement which is required to comply with the company's Accounting Standard Rules 2006. Okay, so in this particular module, they have just covered this particular aspect. So we have got 3 divisions, right? So what are these 3 divisions? First thing is general instruction with respect to preparation of balance sheet and P&L account for those companies which comply with accounting standard rules. Okay, second thing is preparation of financial statement of the companies which comply with Indian Accounting Standard Rules. Third case is preparation of financial statement by non-banking financial companies, that is NBFCs, which will be in accordance or which will be preparing the financial statement in compliance with what? Indian Accounting Standard Rules. Okay, so in this module they have just covered this first division. Okay, that is what has been told over here. Okay, so let's talk about this first division or Division 1. I'll just write this, not much important again, okay, from examination perspective. So we got division 1. Division 1 talks about what? Look at this. General instruction for preparation of balance sheet and P&L account of a companies whose financial statement are required to comply with company's accounting standard rules. Okay, so general instructions for preparation of balance sheet and P&L account for the companies whose financial statement has to comply with accounting standard rules. Look at this, company's accounting standard rules, okay, which should comply with company's accounting standard rules. This is division 1. Okay, so what about division 2? Division 2 is with respect to general instructions for preparation of financial statement for those companies which has to comply with company's Indian accounting standard rules. Okay, so finally we have got division 3. Okay, so general instruction for preparation and financial statement for NBFC. Okay, what is NBFC? Non-banking financial company which has to comply with company's Indian accounting standard rules. Clear? So in this particular module we are just concerned only about this first division. Okay, so we are mainly bothered or concerned about this particular first division, division 1. That is companies which are supposed to prepare the financial statement as per the accounting standard rules. Okay, so as per company's accounting standard rules, that is how do we prepare the balance sheet and P&L account. Division 1 is what is relevant for us. Okay, so look at this. So relevant provision under general instruction for preparation of balance sheet and P&L account. So everywhere else they use the term financial statement, but when it comes to division 1 they specifically use the term balance sheet and P&L account. Okay, as specified in schedule 3. Division 1 are given below. Okay, so these provisions have been given below. Let's just look into these provisions. Where compliance with the requirement of the act, including accounting standard as applicable to the companies, require any change in the treatment or disclosure, including addition, amendment, substitutions or deletion in the head or subhead, or any changes inter se in the financial statement or statement forming part thereof, the same shall be made and requirement of the schedule shall stand modified accordingly. Okay, so what are they telling? According to this particular division, whenever they want to make any addition, deletion, alteration, okay, amendment with respect to any of the item relating to your financial statement, okay, so it might be either an item relating to your balance sheet or an item relating to your P&L account, you can just do it. Okay, so it has got the power to do it. Okay, so division 1. And then the next point is the disclosure requirement. Okay, so disclosure requirements specified in schedule are in addition to and not in substitution to the disclosing requirements specified in accounting standard. So what are they telling? So in this particular schedule 3 there will be certain disclosure requirement. So these are just the additional disclosure. You cannot substitute with these disclosures with the disclosure mentioned in the accounting standard. Now you cannot say that I have followed the disclosure as per schedule 3, I will not be making the disclosure as per accounting standard. No, these are just additional disclosure and not substituting the disclosure mentioned in the accounting standard. Read this point again. The disclosure requirements specified in the schedule are in addition to and not in substitution of the disclosure requirements specified in accounting standard prescribed under Companies Act 2013. Is this clear? Hope you guys understood this. Okay, so the first point, what did they say? Where compliance with the requirement of this act, including accounting standard as applicable to the companies, require any change in treatment or disclosure, including addition, amendment, substitution or deletion in the head or subhead or any changes, okay, in the financial statement or statements forming part thereto, the same shall be made, okay, and the requirement of the schedule stand modified accordingly. So what are they telling? So if the act or accounting standard is asking us to make some changes, it has to be allowed. Okay, so look at this. I'll just simplify and write it. In case the Companies Act or accounting standard So in case the Companies Act or accounting standard brings any changes, modification, amendment, addition or deletion in any of the head or subhead of the P&L account or balance sheet, such changes or modification has to be made. So if the Companies Act or the accounting standard are asking us to do certain changes, they come up with certain modification, amendment, addition, deletion in any head or subhead. Okay, so these changes has to be made. Okay, so these changes has to be made. This is the first point. Okay, so when it comes to the second point, what does it state? When it comes to second point, the disclosure requirements specified in schedule 3, okay, so are additional disclosure and not substituting the disclosure mentioned as per accounting standard. Okay, so the disclosure requirements made in accounting standard or made in schedule 3 are just additional disclosures and are not, okay, so these are not, look at this, substitutional, okay, and are not in substitution of the disclosure So if at all the accounting standards are asking us to make some disclosure, that has to be made. Okay, so just because the schedule 3 is asking us to make certain disclosure, it does not take away the power of disclosure from the accounting standard. It is just an additional disclosure requirement as per schedule 3. Okay, so although schedule 3 is asking us to make certain disclosure, we cannot say that we'll be making the disclosure only as per schedule 3 and not as per accounting standard. So you need to make the disclosure which has been given as per each accounting standard. So these disclosures as per schedule 3, these are just additional disclosure which you will be making along with the disclosure as per accounting standard. Clear? So that's why it clearly says, okay, read this point. The disclosure requirements specified in this schedule are in addition to and not in substitution, okay, to the disclosure requirements specified in the accounting standard prescribed. So additional disclosures specified in accounting standard shall be made in the notes to accounts and by way of additional statement unless required to be disclosed on the face of the financial statement. Similarly, all the disclosure as required by the Companies Act shall be made in the notes to accounts in addition to the requirements set out in this particular schedule. So any disclosure, okay, as per accounting standard or Companies Act has to be disclosed in the notes to accounts. Okay, along with this, any disclosure as per Schedule 3 can be made. I hope you all understood this. Is this clear? Okay, let's have a look at the next point. Notes to account shall contain information in addition to the presented in the financial statement and shall provide, where required, narrative description or disaggregation of the item recognized in those statements, or information about items do not qualify for recognition of the statement. See, notes to accounts, what do we provide in notes to accounts? Notes to accounts shall contain information in addition to that presented in financial statement. Okay, so notes to accounts shall contain the additional information which is not presented in the financial statement. So those information which is not shown on the face of the financial statement will be disclosed in the notes to accounts. Look at this. Notes to accounts shall contain information in addition to the presented in the financial statement and shall provide where required, narrative description, okay, or disaggregation of these items, okay, in the statement, and information about the items that do not qualify for recognition of those statements. So what are they telling over here? Just remember this much, that notes to accounts will normally be giving you those additional information which is not depicted on the face of the financial statement. So such information which I am not able to recognize through the face of these financial statements, such information will be available in the notes to accounts. So each item on the face of the balance sheet and statement of profit and loss account shall be cross-referenced to any related information in the notes to accounts. In preparation of the financial statement, including the notes to accounts, a balance sheet shall be maintained between providing excessive details that might not be assisting the users of financial statements and not providing important information as a result of too much of aggregation. See, why do we have this notes to accounts? If I just show all these notes to accounts or additional disclosure in the financial statement itself, so it would be difficult for the users of financial statement to understand these financial statement. Okay, it will become a little clumsy. Clear? So that's the reason on the face of the financial statement, P&L account and balance sheet, I'll just be providing only the required information. In the P&L account, information relating to my expenses and income, and in the balance sheet, the information relating to my assets and liabilities. Only these information will be provided. Okay. Now, in the notes to accounts, additional disclosures will be made. Suppose in my balance sheet, I've got an item called as secured loan. Secured loan, I'll just be showing the amount, let's say 20 lakh rupees. In the notes to accounts relating to the secured loan, I'll be giving additional description that this particular loan is secured against so and so asset. Okay, so the value of the asset which is being provided as mortgage would be so and so value. Okay, so these information, I'll not be showing it on the face of the balance sheet. Okay, but these information will be disclosed in the notes to accounts. Is this clear? Hope you all understood the concept of notes to accounts. Notes to account is as good as some kind of additional disclosure which were not made in the face of the financial statement. Those information which I am not able to depict on the face of the financial statement will be disclosed in the notes to accounts. Is this simple? Hope you guys understood this. Okay. Okay, let's have a look at the next point. Okay, depending upon the total income of the company, the figures appearing in the financial statement shall be rounded off as given below. Okay, so here they talk about rounding off of the information. Okay, so depending upon the total income of the company, the figures appearing in the financial statement shall be rounded off. Where the total income is less than 100 crore rupees. Okay, so round off shall be done to the nearest 100. Okay, so thousands, lakhs or millions or decimal thereof. Where the total income is 100 crore or more, rounding off shall be done to the nearest lakh, million or crores or decimal thereof. So effectively over here they are talking about this particular round off provision. Okay, what are they talking about? So this would depend upon the total income. If the total income is less than 100 crore, okay, so look at this, if it is less than 100 crore, at that point of time, the values or the figures will be rounded off to the nearest what? Nearest 100, thousands, lakhs or millions. That's all. Okay. But when it comes to look at the total income, if it is 100 crore or more than that, okay, so if it is 100 crore or more, the round off, look at this, it does not start with hundreds. Hundreds shall not be rounding off, okay, so rounding off shall be done to the nearest lakhs, millions, okay, million is nothing but 10 lakh, okay, or crores or the decimal thereof. So here if you see, it is 100,000 lakhs and millions, okay, so 100,000 lakhs and millions, okay, but here if you see, it is starting from lakhs, okay, so hundreds and thousands are not even there in the picture. So rounding off will be done to the nearest lakh, millions or crores, okay, so but when it comes to those entities wherein the total income is less than 100 crore, the rounding off will begin, okay, from the nearest 100,000 lakhs, millions, okay, so that's all, we don't have any crores over there, okay, but here I'll just write this point over here. Rounding off in case of rounding off of figures in the financial statement shall depend upon the total income. Okay, so first case is if the total income is less than 100 crores, the figures in the financial statement shall be rounded off to the nearest 100, 1000, lakhs and millions. So million is nothing but 10 lakh, okay, so I can round it off to the nearest 100,000, lakh or 10 lakh. The second thing is if the total income is 100 crores or more, then the figures in the financial statement shall be rounded off to the nearest what? Nearest lakh, millions and crores. Okay, so look at this. The rounding off shall be done to the nearest lakh, okay, lakh, millions or crores, okay, or decimal thereof. But here it would begin from 1000, okay, so sorry, 100,000, lakhs and millions, okay, it stopped till the million over here, it is going till crores. Clear? So rounding off will be done, okay, to the nearest 100,000, lakhs or millions. Okay, so if the turnover or the total income is less than 100 crore, if the income is 100 crore or more than that, rounding off will be done to the nearest what? To the nearest lakh, millions or crores. Clear? So suppose if I got like 29.99 crore, I'll be rounding it off to 30 crores. Okay, I'll just be rounding it off to 30 crores. Okay, so here if I've got an income like this, let's say 2.98 lakhs, okay, I can just round it off to 3 lakhs, okay, to the nearest lakh. Okay, rounding off can happen to the nearest lakh. Hope you guys understood this. Clear? Not much important again from examination perspective. So once a unit of measurement is used, same unit has to be used consistently throughout. Okay, so look at this. Once a unit of measurement is used, it should be used uniformly in the financial statement. Same measure or same unit of measurement has to be used uniformly throughout the financial statement, okay, except in case of first financial statement laid before the companies after its incorporation, the corresponding amounts for the immediate preceding reporting financial year for all the items shown in the financial statement including notes shall also be given. See, first year I won't be having any preceding year to compare, okay, so first year whenever I'm preparing, look at this, when I'm preparing the financial statement for first year, let's say My company was incorporated in the year 2020. Okay, so I'll be having the information only relating to 2020. Okay, all the figures relating to 2020 I'll be showing, but subsequent year and then on you will be having 2 years. Okay, so 2020, that is the previous year, and 2021, that is the current year. So you will have to show the information relating to previous year and the current year. Okay, so let's say sales, here it was 10 lakh, here it is 12 lakh, so that it is easy for the user of financial statement to compare the figures. In the first year, I don't have anything to compare with, so that's the reason I'll just be showing one amount column. But subsequently, I'll be showing two amount column. One would be containing the figures for the current financial year. Another column will be containing the figures for the previous financial year. Look at this. Except in case of first financial statement laid before the company after its incorporation, the corresponding amounts for immediate preceding reporting period for all the items shown in the financial statement shall, including the notes to account, shall also be given. Okay, so including the notes to accounts, all these information will be given. Hope you guys understood this. Is this clear? Okay, let's have a look at this last part. For the purpose of this schedule, the terms used herein shall be as per the applicable accounting standard division 1 of schedule 3. So here we'll be talking only about division 1 of schedule 3. Division 2 and division 3 are not applicable. Okay, for you what is relevant is division 1 of schedule 3, that is the general instruction for preparation of balance sheet and P&L account for those companies which has to comply with what? Which has to comply with accounting standard. Okay, only that much is relevant for you guys. Okay, so look at this. It will be containing two parts. Okay, so part 1 contains what? It talks about, so part 1 which provides the minimum disclosure requirement for preparation of balance sheet. Okay, so part 2 which talks about the minimum disclosure requirement for statement of profit and loss. Okay, so these have been discussed in detail in the following sections. Okay, so subsequently we'll be learning about part 1 and part 2 of division 1 of schedule 3. So part 1 talks about what? The disclosures which has to be made while preparing the balance sheet. Part 2 talks about what? It talks about the disclosures which has to be made while preparing this statement of P&L account. Okay, so let's have a look at this. Look at this. So first they have given us information about statement of P&L account. So which part is this? Is this part 1 or part 2? Yes, part 1 talks about balance sheet. Look at this. Part 1 it talks about balance sheet. Part 2 talks about statement of P&L. Okay, so we'll be learning the statement of P&L over here and subsequently the balance sheet. Okay, so statement of P&L as per division of schedule 3, that is division 1. So statement of profit and loss. Okay, so division 1 of schedule 3, the statement of profit and loss is the statement of financial performance. Remember I told you what is financial performance and financial position. So same way when you just have a look at this balance sheet, there they'll be using the term financial position. Okay, financial performance is nothing but whether the business entity is making profit or whether it is incurring loss. Okay, that is financial performance. You can either call it as financial performance or financial result, both are one in the same. Okay, and it is also known as income statement. This is also known as income statement. The objective of preparing this statement is to determine the profit or loss of the company. Okay, so what is the objective? The objective is to determine whether the business entity is making profit or whether it is incurring loss. Okay, so the objective is, just a second. Yeah, objective is what? Objective is to determine the profit or loss of the business entity. Okay, so the main objective behind preparing this is to determine whether the business entity is making profit or loss. Clear? Okay, so following is the pro forma of the statement of P&L account suggested in part 2. Okay, remember I told you P&L account is part 2 of division 1. Okay, so balance sheet is part 1. It's like this, guys. So totally if you see schedule 3, we have got how many division? We have got 3 division. Okay, so division 1, division 2 and division 3. Okay, so division 1 talks about what? Division 1 talks about preparation of P&L account and balance sheet. Okay, for the companies which comply with accounting standard. Okay, so for the companies which comply with accounting standard, that is division 1. Division 2 is with respect to what? Preparation of financial statement for the companies which comply with Indian accounting standard. Okay, so division 3 talks about preparation of financial statement for the NBFC, non-banking financial companies. Okay, so which comply with Indian accounting standard again. So these two division 2 and division 3 is not a part of your syllabus. Okay, so for you what is relevant is this division 1. Okay, so division 1 is what is relevant. So again, when it comes to division 1, it has got two parts. Okay, so part 1 and part 2. Part 1 talks about what? This talks about balance sheet. Part 2 talks about the P&L account. Okay, so part 2 talks about profit and loss account. Okay, so that's what has been told over here. Do you find this? Part 2 of division 1, that is what is P&L account. They have given you the format. Let's have a look at this particular format. So first thing is, you'll just be writing the name of the company. Okay, so whatever is the name of the company, just write it in the middle, and statement of profit and loss for the year ended so and so. Normally when it comes to the heading of P&L account, we'll be using the term like this: profit and loss account for the year ending. Okay, or for the year ended. Okay, balance sheet will always be using this particular term, balance sheet as on so and so date. Okay, so let's have a look at this. So when it comes to statement of profit and loss, they have given you the format. Look at this: revenue from operation. As I told you, the figures, if you see, you will be having the figures for the current year as well as previous year. Look at this: figures for current reporting period, figures for previous reporting period, so that it is easy for the user to compare. So revenue for the current year, let's say it is 20 crore, last year it was 18 crore. So I can make out when compared to last year it is increased by another 2 crore. Last year it was 18 crore, this year it is 20 crore. So it is increased by close to 11%. Clear? So revenue from operation, this would be the first thing. If at all I have got any other income, okay, so I'll just be adding other income. So then I get to know the total income. So revenue from operation, add other income, you will get to know the total income. Okay, so this would be the total income made by the business entity. If at all there is any expenses, okay, so if at all there is any expenses, just keep on deducting. Look at this. When it comes to expenses, just remember this particular approach. In what way are they disclosing the expenses? Look at this. When it comes to expenses, cost of material consumed, okay, so purchases of stock in trade, changes in the inventory of finished goods or work in progress, okay, and stock in trade. Then employees benefit expenses, all the salary whatever I'm paying will be included in this employees benefit expenses. Finance cost, okay, so bank charges, okay, so all these things will be treated as finance cost. Any depreciation and amortization expenses, you already know what is depreciation and amortization, right? So depreciation is nothing but decrease in the value of fixed asset due to wear and tear, obsolescence, okay, efflux of time. So depreciation is as good as decrease in the value of my fixed asset. As and when I keep on using the fixed asset, the value of these fixed asset will reduce. That is what is depreciation. If at all the value of intangible assets are reducing, we'll be calling or we'll be using the term amortization. What is amortization? Amortization is nothing but decrease in the value of intangible fixed asset. What are these intangible fixed assets? These are nothing but those assets which we cannot see or touch but certainly can be felt. Those assets what we can see, touch and feel is what is called as fixed asset. So furniture, for that matter, I can see it, I can touch it, I can feel it, that would be fixed asset, that is tangible fixed asset. Okay, machinery, I can see it, I can touch it. Okay, all these things would be treated as tangible fixed asset. Intangible fixed asset, there might be quite a few intangible fixed assets like goodwill, patent, trademarks, copyrights. Okay, so all these things are intangible fixed asset. If at all the value of these assets are reducing, decrease in the value of intangible fixed asset, that would be treated as what? That would be treated as amortization. Is this clear? Hope you guys understood this. Okay, so then when it comes to other expenses, if at all I've got any other expenses, I'll just be writing the same. So from the income, just decrease these expenses. What do we get? We get profit before exceptional or extraordinary item. So profit before extraordinary item. If at all there is any extraordinary item like loss on sale of fixed asset, okay, all these extraordinary items you'll be deducting over here. You get profit. Look at this. Okay, exceptional item, decrease it, you get profit before extraordinary item. After that, just decrease this extraordinary item also, you get the profit before tax. Okay, so from this just pay the taxes. Okay, from this just pay the taxes. You will get to know the profit for the period after. Okay, from the continuing operation, this would be the profit after tax. Okay, so profit for the period from continuing operation. Okay, so profit or loss from discontinuing operation, you will have to show it separately. Tax expenses of discontinuing operation, profit or loss from discontinuing operation after tax, profit or loss for the total period, earnings per share. Okay, so how much is the basic earning per share, how much is the diluted earning per share. Okay, so we'll just write this particular format. So division 1 of schedule 3 shall contain two parts. Part 1, which talks about what? This talks about balance sheet. Part 2, which talks about statement of P&L. Okay, so let's talk about this part 2 first. So part 2 of division 1 of schedule 3. So here we'll be learning about the format in which we prepare this statement of P&L. Okay, so format. Okay, so this is how the format would appear. Okay, so particulars, note number, okay, figures of the current year, figures of the previous year. Particulars, note number, figures of the current year. Okay, so current year amount, and then previous year amount. So first thing is, okay, what would be the first thing? The heading would be like this. Okay, so we'll just be writing the name of the company. Okay, so whatever is the name of the company, we'll just be writing at the beginning, and then statement of profit and loss for the year ended so and so. Statement of profit and loss account for the year ended so and so. Clear? So first thing would be the operating income is what I show, revenue from operation. Okay, so first thing would be revenue from operation. Okay, if at all there is any note, just write the same. So whatever is the figure relating to current year and that of previous year, you will just be showing it over here. To this revenue from operation, you will be adding other revenues or other income. If at all there is any other income, just add it. What do we get? We will get to know the total income. Okay, so total income, nothing but the sum of these two. Clear? This would be the total income. After this, from the total income, we'll have to just keep on reducing the expenses. Okay, so from the total income, we'll have to keep on reducing the expenses. So when it comes to expenses, we'll have quite a few expenses. Look at the disclosure, how we'll be making relating to expenses. So cost of raw material consumed. Okay, so changes in the finished goods stock or work in progress. Look at this. Cost of material consumed, purchase of stock in trade, changes in the inventory. Okay, so cost of purchases of material, changes in the stock in trade, or work in progress. So whatever is the changes pertaining to stock in trade, work in progress, okay, and finished goods. Okay, so these stuff also you will be writing. All these would be the expenses. Look at this. What are the other expenses? All these things are relating to my direct expenses. All these things are relating to goods. Okay, cost of material consumed, purchase of goods, changes in the stock. All these things are with respect to what? All these are with respect to direct expenses, that is material. Okay, so after this, the indirect expenses, employees benefit cost. Okay, so anything relating to employees benefit you will be showing over here. And then finance cost. What is finance cost? Anything relating to interest which I pay to bank, financial institution, all these things, the bank charges. So this would be treated as finance cost. So if at all there is any finance cost, you will be deducting the same. So depreciation and amortization. And then other expenses. So this would be the expenses. After this, what you will be doing is, you will be checking out the total expenses. Okay, so by doing this, you will get to know the total expenses. So here I have got the total income, here I have got the total expenses. Okay, so what I do is, so total income minus total expenses, I'll get to know the profit before extraordinary and exceptional item. Okay, so let's just name this as A. Let's just name this as B. Okay, so after this, profits before exceptional and extraordinary items. Okay, so whatever is the profit which we are getting before exceptional and extraordinary items, so this C will be equal to A minus B. Clear? So what is A? A is your total income. From the total income, if you just deduct the total expenses, you will get to know this particular profit. Okay, so this is what? This is the profit before exceptional and extraordinary item. From this you will have to just deduct. Okay, so the profits, that is exceptional item and extraordinary item, less exceptional items. What do we get? We get the profits before extraordinary item. Clear? From this, if I just deduct the extraordinary items, look at this. From this, I'll be deducting extraordinary item. Okay, so what do I get? I get profit before tax. Okay, so this would be profits before tax. So this amount, whatever I get over here, this would be treated as profit before tax. From this, I'll be deducting the tax expenses. Okay, so what do I get? I get the profit or loss for the period from continuing operation. Okay, so I get the profit or loss from continuing operation. Okay, so from this, less taxes of current year. I get profits or loss from continuing operation. Yeah. So in this way, I'll get to know the profit or loss from continuing operation. So profits or loss from discontinuing operation, I'll just be showing it separately. Okay, so if at all I've got any profit or loss from discontinuing operation, look at this, I'll be showing it separately. So tax expenses of discontinuing operation. Okay, so then from this profit or loss from discontinuing operation, deduct the tax, I get to know the profit or loss from discontinuing operation after tax. So then the total profit, that is profit of the continuing operation and profit of discontinuing operation. Okay, so this is profit or loss from continuing operation. I'll just name it as D. Then profits or loss before tax from discontinuing operation. Clear? So from this, I'll just be deducting the taxes. I get profits or loss after tax. This was before tax. Once I pay the taxes, I'll get to know the profit or loss after tax from the discontinuing operation. Okay, so this I'll just name it as E. Clear? So then the total profit, how do I calculate the total profit? Total profit or loss will be equal to D plus E. What am I doing when I am saying D plus E? I am just adding the profit from continuing operation with the non-continuing operation or discontinuing operation. Okay, so continuing operation, the profit was so much. Add the profit or loss of discontinuing operation, you will get to know the total profit. Okay, so this would be the total profit or loss. So this profit, if you divide it by just number of shares, you will get to know the earning per share. Okay, so this, if you divide it by number of shares, you will get to know the earnings per share. That is basic earnings per share or diluted earning per share. So either the basic EPS or diluted EPS, this is what we'll be getting. Is this clear? Hope you guys understood this. Okay, so this is the format of preparing the P&L account. Okay, so we have written the format of preparing the P&L account. We have got few instruction what we need to follow while preparing this P&L account. Look at this. General instruction for preparation of statement of P&L account. We have got a lot of instruction over here. Okay, look at this. Section 25, companies, revenue from operation, what and all things should it be disclosing, financial cost. Remember I told you interest. Okay, on borrowed amount, all these things we'll have to just disclose. Additional information, a lot of theoretical aspect with respect to each and every item of P&L account has been given. Okay, so we'll just be looking that in the next class. After that, same way we'll be learning about the balance sheet, which is part 1 of division 1 of schedule 3. So they would have given you the format. Look at this format, and again they would have given you the general instruction for preparation of balance sheet. Okay, so the theoretical part. Okay, so finally after that we'll be looking upon solving the illustrations. Is this clear? Clear? So today we discussed the introductory aspect about the financial statement. What is financial performance? What is financial position? Okay, so which statement is prepared in order to ascertain the financial performance? Which statement is prepared in order to ascertain the financial position? So then we discussed about schedule 3. So schedule 3 of financial statement, it consists of 3 divisions, division 1, 2 and 3. Division 1 talks about preparation of P&L account and balance sheet for those companies which has to comply with accounting standard, companies accounting standard rules. Division 2 talks about preparation of financial statement by the companies which has to be complying with companies Indian accounting standard rules. Okay, so division 3 talks about companies, okay, preparing the financial statement, that is mainly with respect to NBFCs, okay, which has to comply with Indian accounting standard. In this or at this particular level or in this module, you guys will be learning only about division 1. Okay, so division 1, it contains of 2 parts again. Part 1 balance sheet, part 2 is P&L account. So we spoke about P&L account and we understood the format in which this P&L account has to be prepared, this format. So this is the format in which this profit and loss account will be prepared. In the next class, we'll be learning about the general instructions which has to be followed while preparing the P&L account. What are the general instruction with respect to preparation of P&L account will be learned in the next class. Okay, thank you so much guys.